What's going on, folks? Hopefully everyone can hear me all right. Let me know in the chat if you can hear me. If you guys have any tickers, any current pairs, anything you want to check out, let me know in the chat. We'll do some analysis together, guys. A little bit of YouTube analysis. The only downside of YouTube is it is a little slower, the delay, unfortunately for us. That's really my only complaint about it. How do you find negative and positive COG? There's a video on it inside the bonus sessions, Crimsy. What's up, Kapil? Tesla. I can check out Tesla. I was just talking about Tesla. Alrighty. So let's zoom out here. Let's see what we have on Tesla. Dude, I haven't placed a single trade today, man. Nice, the Chaz. That's awesome, brother. That is very, very useful stuff, right? I mean, we're breaking through that level. Well, this is why we like first hits, not so much second hits. I mean, dude, there's nothing I can do here on Tesla, guys. Like, if you're not already positionally inside of Tesla at this point, there's nothing I can do where it is right now, because the whole structure of how we trade is we identify where the banks and institutions buy and sell, so we can buy and sell with them, right? If I'm at ATH, all-time highs, that just means I don't have a target, right? And the whole concept behind how I'm trading is I'm identifying where the bank institutions buy and sell to calculate my risk-reward ratio, see if a trade is worth taking with them, right? So we can drill down to the weeklies, see if the weeklies give us anything better. But as far as the monthlies go, nothing good on the monthlies, nothing good on the weeklies. Let's see if the dailies, if we can squeeze a day trade out of Tesla. So maybe the dailies. And that's not enough structure yet. Could it be setting up a potential sell-off? Of course. But it could also just continue on this way it did here, right? So we don't have an actual area of institutional supply yet. And for me, that's it. That's all I'm going to do on Tesla, man. Now, I personally, I can say I'm already in long Tesla, but more from a positional standpoint, not actively trading it. So that's a little bit different. But there's nothing I would do now in terms of placing a trade the way this chart is set up right now. Cool, cool, cool. Anything else you guys want to check out? The weird thing is I can't see how many people are in the chat either. I have no idea how to see that when we're on YouTube. Or when I'm in OBS, I guess would be the right way to say it. Let me know in the chat if there's anything else you guys want to check out, guys. Got my Vietnamese coffee. I'm ready to go. Euro yen. All right, let's go check it out. Euro yen. So for those of you that don't trade Forex, Forex is the largest asset class in the world. It is the currency market. It is more of a swing trading market in general. It is better suited towards swing than it is towards day trading. Amazon and dollar yen, sure. But let's start from scratch. We'll do it together, guys. We'll clear the charts, and we'll look at it together as if we know nothing, all right? So the first thing we do whenever we do analysis, we always want to start on higher time frames first. It doesn't matter if you're a scalper, day trader, swing trader, whatever you want to do. You still want to make sure you're marking off those higher time frame levels because they do tend to be more powerful than lower time frames, right? So the last thing you want to do is be someone who's looking at microcosms of information like 5-minute, 50-minute candles, and you're making trading decisions without seeing the broader picture, right? Imagine you're going long on 5-minute, 50-minute candles into major monthly, weekly, daily supply. Which of those time frames do you think is going to win that battle? Probably the higher time frames, right? Because it requires more capital to drive price action on a monthly level than it does on a 5-minute level. All right, so here we are in the monthlies, and the first thing we want to look for is IOF, institutional order flow. Where are the major banks and institutions buying? Where are the major banks and institutions selling here in euro yen? So I have this pivot reversal right here, right? I have this nice impulse up, balance, impulse down. Some big banker institutions sold heavily here, driving price action downwards explosively on euro yen right there. Now, how do we know this is a banker institution selling here, guys? Why is this a bank selling here and not you or me? I'm going to include the wick because of that gap up. Why does that have to be a banker institution and not us? Or why is that very likely a banker institution and not us? Perhaps a better way to put it. I'm just going to make sure we're not retesting new in a previous level. I don't think we are, though, from what I remember. Yep, that seems to be it. All right, cool. What do you guys think? Why do we know that? Why do we know that has to be institutional? Or that's very likely that it's institutional? Yeah, absolutely, Benji. 100%. Have part of your analysis done ahead of time, right? It just comes down to the strength, right, guys? Like, think about Forex in financial perspective. Forex trades over $7 trillion a day. For you to drive price action this impulsively, this quickly, unless there's something dramatically fundamental happening, there has to be a huge amount of capital to create that level of impulse that quickly. Does that make sense, everybody? More money than I can dream of. There you go, Dario. Right, exactly right. It just requires huge amounts of capital. Exactly right, Dutch. Exactly right, Kapil. So it's just a matter of this level of imbalance this quickly requires massive, massive trades, massive capital, right? And retail traders just don't have that level of money. We don't have billions and trillions of dollars, right? At least most of us don't. So the reason professional traders look at this first is because most major price movement in the markets is driven by banks and institutions, right? They're the ones who have enough money to move the markets. So when we look for trade opportunities, what we really look for is where are the banks and institutions buying and selling, because we want to study if we have an opportunity to buy and sell with those financial institutions, right? I don't want to trade against the banks. I don't want to trade on the reaction to banks buying and selling either, because by that point you're a little too late to the move. Instead, I want to see where the banks buy, see where the banks sell, and then I want to wait for price to come back to those levels to then study an opportunity so I can buy and sell together with the financial institutions. And that's really the foundation of how professionals look in the market. We mark off these levels of institutional selling, mark off levels of institutional buying, and then we wait for price to come back to see if we have an opportunity to buy and sell with the banks. Now, the reason we're able to use levels where banks and institutions have bought and have sold as potential future trade opportunities is, again, coming back to the magnitude of the orders, right? If you're a big investment firm, if you're a big investment bank like a Deutsche Bank, right? Let's say Deutsche Bank here is the one who caused this price action. Deutsche Bank decided that they wanted to buy, whatever, 15 million standard lots of euro yen here at the limit price of 150. So they place this massive limit order, because banks place limit orders, right? They have specific entries, specific targets. They place this massive limit order to buy, what did I say? 15 million standards at 150. Just because Deutsche Bank wants to buy 50 million standard lots at 150, that does not mean there's going to be 50 million sellers sitting there waiting for them right at that limit price, right? In fact, that's very, very unlikely. So what happens to financial institutions when they place these orders is they only manage to fill some of their order based on the liquidity available in the market, right? So Deutsche Bank wants to buy the 15 million. When they place the order into the market, there are only, let's say, 5 million sellers available. If there are only 5 million sellers available, how many shares, or in this case lots, how many lots can they buy? 5 million, right? You can't buy more than what's available. And so that's what they do. They buy up all available liquidity at that price point. So they grab the 5 million. They're like, all right, well, give me the 5 million. I want the 5 million. They grab all available sellers here at the limit price of 150. But by grabbing up all the sellers, what they're really doing is they're creating a sudden and dramatic imbalance, right? Because Deutsche Bank wanted to buy 50 million standards, not 5 million. So it still has 10 million unfilled buy orders sitting here. And if I have 10 million buys, 0 sellers left, that's going to create an imbalance of more buyers and sellers, which drives price action up. Not only does it drive it drives it up impulsively as it did here, or in the case of selling, it drives it down impulsively as it did here. More importantly, it leaves Deutsche Bank with those 10 million unfilled orders. Now, Deutsche Bank's not going to give up on their trade, right? Just because they couldn't fill their trade all at once. Well, that wasn't surprising for them. They knew they weren't going to fill it all at once. So this is where we wait for the opportunity. If price comes back to this level, because we know there's a strong imbalance of more buyers and more buy orders and sell orders here, which means if price retraces back in, we have a good opportunity to take advantage of those unfilled orders and buy together with this financial institution, whichever financial institution caused that imbalance. And that's really what we're looking for. So institutional selling, institutional buying. Let's drill down to the weeklies here on Euro Yen. And what I'm looking for here on my intermediate time frames, I'm looking for trend and I'm looking for correlating structure. So first things first, what is my trend here on the weeklies for Euro Yen, guys? Is this an uptrend, a downtrend, or a sideways moving trend? And don't forget the gaps. What do you guys think? Up, down, or sideways here on the weeklies for Euro Yen? Jesus. There we go. Now I got that hoodie off. I wonder if it's faster if I do it on the phone. But I feel like then it's going to be worse quality, right? Because the delay is rough, guys. Like, no joke. It's like 30 seconds between me asking and getting answers. Down, down, down. Yes, correct. Lower highs, lower lows. So what does that mean for us as retail traders? That just means we'd like to go short, right? We would rather trade with the trend than against the trend because trend trades are higher probability trades. Do we have any order flow with that in mind here on the weeklies for Euro Yen? Yeah, it's Forex. Forex is literally the most heavily traded asset class in the world. So always order flow happening here when you're trading in Forex. If I look from current price, I have this beautiful pivot right here, impulse, balance, impulse, area of institutional buying, some bank bought here driving price action up. And if you look at this level, you can see that this is actually a retest of this pivot right here. Can everyone see that? And if you look at this pivot, you can see that this is a retest of this continuation pattern over here, impulse, balance, impulse. And then if you look at that, you can even see that this continuation retests this pivot right here. So it all started back here, right? Some bank bought, driving price action up, continued, came back in, hit the infield orders, popped up, came back in, hit the infield orders, popped up, came back in, hit the infield orders, popped up, create a little bit of zone creep. And then finally came back in, hit those infield orders, popped up, create a little bit of zone creep, and that's our most recent level. On the sell side, a little bit of impulse, balance, impulse, continuation pattern right there. Area of institutional selling, we're going to mark that off with a red sell box. So we have institutional buying, institutional selling. Let's drill down to the dailies, and this is where we're going to look for an actionable trade if there is one. Okay, so here we are on the dailies. Do we have any order flow here on the dailies? We do. Again, Forex guys will always have institutional order flow. It's way too heavily traded by banks and institutions. Impulse, balance, impulse to not have any order flow is what I mean. Nice little continuation right there. I wish it was a little tighter structure. I wish the wick didn't come all the way down to this continuation to gain strength and movement. Can everyone see that, by the way, what I'm talking about? Let me mark that green for demand. This was a continuation pattern, right? Price shot away, price came back, hit those unfilled orders from over here, and shot back up, creating a little bit of zone creep. So the strength, the movement came from down here, not from up here. We did still have an impulse out here, but I'm just letting you guys know a lot of the strength came from down here initially, right? On the sell side, I mean, technically, I don't think we've broken this supply zone. Do you guys see this continuation right here? Impulse, balance, balance, impulse, right? It's a bit broader than we would like it to be, but we're still in it. We haven't broken that level. So we've deeply penetrated into the supply zone, right? Some banks sold heavily here, driving price action down, leaving behind unfilled orders. We've come back in, we've hit these unfilled orders, and we seem to be reversing out because of the imbalance. Now the problem for us is, how does this leave us in terms of a trade opportunity here on Euro Yen? It doesn't leave us in a good situation, right? Because this demand zone is right on top of the supply zone. My risk to reward ratio here is absolute garbage. So it's not exactly a trade that I'm super psyched about at this point, because I don't really have a lot of breathing room to take a trade, right? I can't take the short because demand's too close. I can't take the long because supply is too close. If we start looking at higher up levels, we have potential opportunities, right? If we can get up here to this pivot, impulse, balance, balance, pivot reversal, nice area of institutional selling. We can see, of course, that this reversal is a retest of this mess. This pivot reversal right there. And then down here we have this pivot reversal as well that could also potentially be an opportunity. Let's just see where we measure out in terms of risk to reward ratio. This is a very important part of trading for anybody who is not a Phantoms member. Trading is not just about finding high probability trades. Obviously, you need to learn how to read charts and find high probability trades, but that is just step one. You have to look for trades that are high probability trades, but you have to take it a step further and look for trades that have low risk with high profit targets as well. So we look for high probability trades, and then we take it a step further and we filter of those trades that are high probability, which ones have the lowest risk with the highest proportion of profit targets. And we look for trades that ideally have profit targets of at least 3 times our risk or more. This is a very important aspect of trading, because no matter how good a trader you are, you're never going to be right 100% of the time, right? You can be the best trader in the world, you're never going to be right 100% of the time, because trading in its heart is simply probability analysis, right? When we go and we do our analysis on the charts, even if everything looks perfectly right in terms of analysis, it's not a guaranteed winner. There's no such thing as a guaranteed winner when it comes to trading. So professional traders, we accept the fact that even if we do everything perfectly right on our end in terms of analysis, sometimes trades will move against us, right? The largest investment firms in the world lose trades, so it stands to reason that we too will lose trades. And the way we combat these losses is we look for trades that have low risk with high profit targets, so that when we lose very little, and when we win, one winning trade makes up for multiple losing trades. And that's really the foundation of trading. Trading is much more about risk management than anything else. So both of these are potentially viable trades. This is a 3.78 to 1 reward to risk ratio, so better than a 3 to 1. Decent multiple time frame correlation, good strength and movement, broke past the oppositional again, has not been retouched, so potential long position down here at the 157.23. And then on the short side, this is also potentially viable trade, 4.19 to 1 reward to risk ratio, good strong profit target, multiple time frame correlation. Again, good strength and movement, broke past the oppositional again, never been touched. So potential entry there, short at the 163.85. And that's what I have for you on Euro Yen, my man. Cool. So those would be the levels I would be looking for. Let's do one more, and then we'll switch over to one of the social medias. Amazon relies on fundamentals. I mean, I don't make my trading decisions that way, man. I will incorporate them, Jose. Green will use his fundamentals way more than I do in terms of his chart analysis, right? He will go and do deep dives into fundamentals. So if you are a more fundamentally driven trader, then you can absolutely incorporate them into your trading. But I use them as a secondary confirmation. Now, can they influence? Of course. Any fundamental announcement can strongly influence. It's literally the reason that the second tab on my screen is the economic calendar, right? Like, that's not a coincidence that the second tab on my screen is the economic calendar. It's because this is important stuff, right? You need to be aware of what's happening in the world, major economic announcements, things of that nature. Yeah, but not much longer, Benji. I mean, we're going to be focusing more on Instagram because TikTok's going away, right? All right, let's go check out Amazon. AMZN. Let's go a little faster here on Amazon. Start here on the monthlies. Always higher time frames first. So many lows, jeez. I mean, so same thing, man. Anytime I'm at ATH, there's nothing for me to do there. What am I going to do at all-time highs? I can't guess where it's going to turn, right? So it's just not something, it's like a no-go for me. Let's see on the weeklies if it gives us anything better. Nothing on the weeklies. Let's see if the dailies give us anything better. Still no. I don't have good structure even on the dailies. So maybe we start setting something up, but we don't have anything as of yet in terms of actual structure. So nothing that would interest me at this point. Cool. So that's what I'd say, brother. Nothing for me on Amazon right now. Got to wait for a retracement, wait for an actual setup so we can take a trade. Dollar yen. All right, dollar yen will be the last one, and then we'll switch over to we'll do TikTok. We'll try out TikTok. All right, let's go to the monthlies here. So once again, Forex, largest market in the world, trades over $7 trillion a day. Massive, massive market. I mean, we already have our monthly levels marked up here because we just did this last night for someone. Nice area of institutional selling here. Some big bank institutions sold heavily here, driving price action downwards explosively on dollar yen. Beautiful inbounds down. Did they fill all their sell orders though, guys? Obviously not, right? If they'd filled all of their sell orders, price would not have exploded down. It would have continued to consolidate and move sideways. Area of institutional buying here, nice continuation. Impulse, balance, impulse. Beautiful level of institutional buying. Some bank bought heavily here, driving price action up, leaving behind unfilled buy orders. So when price retraced, came back in, hit those unfilled buy orders for the first time. First hits are what we look for, right? This is where we look for entries. It's that huge pile of unfilled buy orders. Because there are more buyers and sellers, what happens to price? Price goes up. That's where we get in, right? Comes back in a second time, hits it, and we can see we create a little bit of zone creep there. It's actually the third time realistically. So multiple hits of that demand zone, and maybe we're even setting up a tentative continuation pattern right there. Let's drill down to the weeklies. And the first thing I want to evaluate on my intermediate time frame is my trend. Just because of the delay, guys, we'll just go through it more simply. The trend obviously was very much an uptrend, right? We had this uptrend happening right here. We had higher highs, higher lows, a little correction right there, higher highs, higher lows, higher highs, higher lows, higher highs, right? And then we reversed, broke past the control point, ending that uptrend. Since we reversed, have we established a new trend? Not on the downside, but here we have a little gap correction right there. So we did do a higher high, a higher low, a higher high, a higher low. So we have established a little bit of an uptrend right there. What's up, the cool? Can everyone see that right there? That little slight gap correction right here. This one closed right here. This one opened right here. That gap correction counts. So that is like me having a corrective phase right there outside of market hours, which means I have a higher high, a higher low, and then a higher high and a higher low. So I have established 3 directional segments, therefore establishing an uptrend. What does that mean for us as retail traders? Well, that means ideally we'd like to go long. We would rather trade with the trend than against the trend, right? Problem is we just came in to weekly supply for the second time, by the way, because it was a breakaway gap. So first hit right there, that was the second hit to weekly supply and just reversed out. On the buy side, we've already hit this demand zone. Look at this beautiful continuation. Impulse, balance, impulse. Some big bank bought heavily here, driving price action upwards explosively on dollar yen, leaving behind unfilled orders. Price retraced, came back in, hit those unfilled orders for the first time. First hits, guys. And what happened? More buyers and sellers. Boom, up we go, right? So that level has already been hit. Let's drill down to the daily, see if there's anything actionable for us here. And it's a nice level. We just hit it already. So look at this beautiful pivot reversal. Impulse, balance, impulse, pivot reversal. That is daily, weekly correlation. Zones on top of zones. Price shot away, came back in. Where did price turn, guys? This is the importance of multiple time frame correlation. Look at how beautiful that entry would have been, right? If you took that entry, that was the time. Nice area, multiple time frame correlation, zones on top of zones. Why do we love zones on top of zones? Because they form stronger levels of imbalance. So some bank bought heavily here, driving price action up. Some bank had already previously bought. When we come back into this level where the two zones overlap each other, what we're really doing is we're hitting this Venn diagram of unfilled orders, this bigger pile of unfilled orders, creating a stronger level of imbalance where the two zones overlap to the point that price comes in, hits that stronger level of imbalance, and immediately shoots away up to supply. Comes all the way up to supply, hits the unfilled sellers, and then pops back down. So nice level, already hit, right? This little level right here, little impulse balance, impulse continuation. It is a daily standalone. It does have 4-hour correlation on a lower time frame. But if we looked at just straight the daily, it's a 1.96 to 1. So we can trade just the daily. If we're going to trade this level, we'd have to go the more conservative route and trade just the 4-hour daily correlation, because at least then we have a 4.19 to 1 reward to risk ratio. So we have enough profit if you have the patience to wait for it to get down to the 4. Obviously, 4 hours and dailies aren't as powerful as when you have like daily weeklies or daily monthlies or weekly daily monthlies and so on and so forth, right? But that's really the most viable trade we have as of this moment on dollar yen. And we do seem to be reversing out of supply the way we should. We came back in at the Enfield sellers for the second time, and seems to still be an imbalance of outward flow there, pushing price action back down. So that's what I got for you in dollar yen, my man. Cool. All right, I'm going to go hop over to our TikTok account. For those of you who are new to Phantoms, if you want to learn more about trading at a professional level, I'm teaching a workshop this Thursday at 7 p.m. Eastern. You can register for free on our website, TradePhantoms.com. Just click this purple register here button. And in that workshop, we will do a deeper dive in all this stuff, guys. We'll teach you a lot more about how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with the financial institutions, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly so you can reduce your risk, generate higher rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. It is free, costs you nothing but some of your time. And if you're interested in becoming a Trade Phantoms Pro member, we have that special holiday promotion going this week for people who want to join and have us actually teach and mentor you and trade live with you. Cool. I'm going to go hop over to our TikTok. We only have, a little bit over a month and 2 days left of TikTok, guys. So if you don't follow our TikTok, I don't know if it's even worth the point to follow at this point, but we're going to be transitioning most of our lives over to our Instagram. But right now I'm going to be on our TikTok. It's just tiktok.com/@TradePhantoms. But most of our lives are going to be on our Instagram from now on, instagram.com/TradePhantoms. So if you don't follow our Instagram, definitely follow our Instagram. Can we get a trend session? I mean, there's a whole